Anyway, let's get started this week. Let's talk about what's the number one topic everybody's talking about is inflation. This week, last week they came out with the Consumer Price Index, which was I think 8.4%, the highest level we've seen in years. And that's the government statistic. The real statistic is something like 16%, 17%. And this week they came out with the Producer Price Index. And the Producer Price Index year over year was up a stunning 11.2%. 11.2%. And that's understated. And producer prices are real important because these are the raw materials. These are the things that go into consumer products. So when you see the input prices of natural resources, energy, all these things that go into producing products, when you see it rising, especially rising more than consumer prices, you know we don't have peak inflation yet. That the worst is still yet to come because it takes, months for producer prices to filter into consumer prices. And this is the 23rd straight month that we've seen producer prices rise. And it's quite substantial. And this is the highest level of inflation that we've seen in like 75 years. Now, some would say, well, wasn't inflation really bad in 1980? Yeah, it was, but it's worse now. And especially if you take the real inflation numbers that Shadow Statistics calculates. He said this Consumer Price Index is up 17.15%, and producer prices are up over 20% year over year. These are numbers that are just astronomical. And we're all feeling it. We're feeling it in every aspect of our life, certainly not limited to filling up our car. Now, I monitor the gas prices pretty closely because, that energy goes into everything. And we've seen a little bit of a pullback in gasoline prices. My local Wawa, it's been $3.99. They're trying to keep it under $4. I guess that's a psychological thing for most people. And on the Parkway, I saw it today, $4.15. But they're going to start to go back up because a barrel of oil has gone up. Oil closed on Friday at almost $107 a barrel. After correcting down to 95, 96 the last couple of weeks, it's on the rise again. And, of course, gasoline prices are tied to the price of a barrel of oil. So, fill up while you can because we're going back over $4 again very soon. Now, of course, the White House refuses to take responsibility for this inflation. It's Putin's fault. They're always put Putin to blame for inflation on Putin. See what I did there? Putin to blame? You like that? And this is really disingenuous. It's an outright lie. Yeah, the invasion of Ukraine has accelerated energy prices, but it wasn't like inflation wasn't here a month ago. We've been talking about this program for months, way prior to when Putin invaded Ukraine. But surely it's going to make it worse. But for the White House and Biden and Peppermint Patty to come out and say it's Putin's price hike is disingenuous at best. And I guess they feel that Americans are so stupid that if we lie to them to their face that they'll believe it. And now there's even talk in Washington about potential price controls. And we haven't seen price controls since Jimmy Carter tried it, and it failed. You can't fix inflation by regulating prices through price controls. I mean, it just never worked because producers stopped producing. If you're going to tell a producer that, hey, this is the price you're going to charge for your product, and the cost of producing that product is higher, well, we're just going to stop producing the product. We're not going to lose money. And of course, the White House is trying to blame oil companies. They're trying to blame meat companies for meat prices going higher, which obviously is really not the cause of this. But once you start seeing rampant inflation, politicians say, okay, let's do price controls. Let's see if we could, for 3 months, you're not allowed to raise any prices on certain things. Never works. It just makes for bigger shortages. And now you have not only, you won't have any rising prices when you have price controls. You just won't have any product. And we're seeing inflation everywhere. I mean, there's no place you don't see it. U.S. hotel prices soared to record highs on consumer-driven demand. We're seeing airline tickets rise, rental cars. Americans are splurging on travel right now. I mean, I guess we felt that we were cooped up for 2 years and life's too short, and we're going to go out and enjoy ourselves and take advantage of some leisure activities now that most of the COVID restrictions have been taken down. So we're seeing pent-up demand. You could got a hotel room for $10 back in the midst of COVID. And now the average price has risen to $149 a night, which is the third highest price ever. So there's nothing that's not going up in price. Wages are starting to go up, but the problem is wages aren't going up as much as the prices are going up. So everybody's bringing home a little more money, but not enough to keep pace with inflation. So inflation right now is the big story. We're sitting at 1/4% interest rates. That's the Fed-controlled interest rates. But in the bond market, the big story is rising interest rates, soaring interest rates. And it's really starting to become interesting, to say the least. This week, the 10-year Treasury bond closed at the highest level in many, many years, 2.83%. It wasn't long ago that we were at 0.4%, a couple of years ago. Back in November, we were at 1.3%, and here we are at 2.83, knocking on the door of 3% interest rates. In the big picture, historically, 3% interest rates on a 10-year bond is still historically low. But when you look at the last 10 years, this is really banging hard. And it's affecting a lot of things because the 10-year Treasury yield affects mortgages. This week, mortgage rate hit a new high. The 30-year mortgage rate averaging across the United States, 5.15%. Historically, relatively low. But if you look at the last 10 years or so, it's high. It's at a new high. Wasn't long ago, we were at 3.5%. We were under 3 at one point. The 15-year fixed rate mortgage, 4.45. Just to give you some perspective, I mean, the 30-year mortgage started the week at 4.97, closed at 5.15. 15-year started at 4.24, closed at 4.45. So if you're looking to buy a house, you better lock in that mortgage rate because it seems like they're going much, much higher. And now we're starting to see cracks appear in the housing market as sellers begin to lower their prices. We're still in the housing market boom. There's still significant shortages. There's still significant demand. But now we're starting to see this craziness starting to slow down. We're starting to see more supply being added to the market as people are saying, we were thinking about selling our house and now must be the time to do it because, everybody's buying above asking prices. Interest rates are starting to go up. And I think we should put our house on the market. So that's adding to supply. The house affordability index is the worst it's been in decades, meaning with mortgage rates going up, the price of housing elevated, it's extremely expensive to buy a house these days. And that's affecting first-time home buyers. So inflation, it will continue to be the story. It's not going away. It's not transitory, as the Fed would like us to believe. The question is, what can be done about it? I mean, what's the Fed going to do? In May, they're going to raise interest rates another 0.5 point. Who cares? You'll be at 3/4 of 1 point. And to refresh your memory, and I brought it up a number of times on the program, is that in 1980, the last time we had an inflationary spike, which is now higher today in real terms than it was then, I mean, the Fed started raising interest rates 2.5% each meeting every 6 weeks. Not 1/4%, not 0.5%. And they started at 7%. We started at 0 and we raised it 1/4 point. It's ridiculous. It's just for show. And as I said before, the only thing raising interest rates are going to do is destroy the financial markets, destroy the housing market, and let inflation run. So now we're going to have stagflation. We're going to have a slowing economy, and we're going to see rising prices and shortages, by the way. And it just seems to be a perfect storm. It's one thing after the other. It's energy prices. It's food prices. We talked the last couple of weeks about bird flu spreading across the United States, and the prices of eggs and poultry is soaring. So far in the last few weeks, they say 26 million chickens and turkeys have died or been culled due to the virus. Wholesale national eggs prices jumped to $2.60, up from $1.20 in early January. That's more than a double. It's crazy. So you got poultry prices rising, you got meat prices rising, you got energy prices rising. You got fertilizer shortages. We mentioned to you last week that, we're starting to see in a lot of articles now the word famine being used. And hunger and food shortages around the world. We're starting to see food riots in third world countries as the price of food is rocketing so high, and it's such a high percentage of the income of people who live there. We're seeing unrest in Egypt, Sri Lanka. You got to keep an eye on Nigeria, Colombia, the Philippines. And we're starting to see inflation riots. We saw riots in Peru recently. Sri Lanka had just announced that they're defaulting on their debt. They can't pay the interest. They're virtually going bankrupt. Alfred Henry Lewis said this in 1906. And I think this is pretty scary. Quote, "There are only 9 meals between mankind and anarchy." Think about that. 9 meals. You miss 9 meals, you're not going to be happy, right? But we're really looking not only at soaring food prices, but we're also looking at the potential for shortages at any price. And I think that's another reason why we should all plant a garden, if you need one more reason. So another issue is the fertilizer shortage. This is really something that makes you scratch your head. I mean, really. Why is it that most of the fertilizer in the world is produced by Russia and Belarus? Why aren't we producing fertilizer? So now a good portion of the world needs to depend on Russia to get the fertilizer, and Russia's keeping it home. Without fertilizer, you don't grow food. If you don't grow food, people starve. It's pretty simple. None of us grow our own food, right? Or few of us actually do. So we're dependent on farmers, right? So you would think that the government, our capitalist corporate society would do everything they could to make sure that our farmers get fertilizer. Well, check out this headline from Zero Hedge. Black Swan event, question mark? Top U.S. fertilizer producer hit with rail delays to Midwest. A fertilizer supply shock is imminent for U.S. farmers as CF Industries Holdings warned Thursday that rail shipments of crop nutrients would be reduced to top agricultural states, which couldn't come at a worse time as the Northern Hemisphere spring planting season is underway. The world's largest fertilizer company said Union Pacific Railroad had hit it with railroad mandated shipping reductions that would impact nitrogen fertilizers such as urea and urea ammonium nitrate shipments to Iowa, Illinois, Kansas, Nebraska, Texas, and California. Union Pacific told CF Industries without advance notice to reduce the volume of private cars on its railroad immediately. This means CF Industries had to decrease shipments by a whopping 20% to stay compliant. The timing of this action by Union Pacific could not come at a worse time for farmers, said Tony Will, President and Chief Executive Officer of CF Industries. Not only will fertilizer be delayed by these shipping restrictions, but additional fertilizer needed to complete spring applications may be unable to reach farmers at all. By placing these arbitrary restrictions on just a handful of shippers, Union Pacific is jeopardizing farmers' harvest and increasing the cost of food for consumers. Do you believe this? Are they trying to kill us? I mean, are they purposely trying to do everything they can to kill our supply chains, to kill our food sources, to ramp up inflation, to destroy every supply chain. I mean, it's almost like this is a calculated move. Why would a railroad, knowing that there's fertilizer shortages, tell fertilizer producers to cut back 20% of their shipments? I'm telling you, we're going to see a food crisis in America. It's coming. It's going to be worse around the world, but a food crisis is coming. Are you prepared for it? See, the thing is, there's something called normalcy bias. Normalcy bias is a psychological term. And normalcy bias is when we believe, as was today and yesterday, so will be tomorrow. It's hard for people to fathom life that's different than life they've experienced. And you could say this to anybody who's lived through a natural disaster. Take Sandy here on the Jersey Shore. I mean, we never thought that such a storm could do what it did, the damage that it did to the Jersey Shore, and how long it took to recover from it. We never seen that in our lifetime. And the same is true of inflation. We've had low inflation for most of our lives. And now we're starting to see inflation we've never seen before. And we're like, what is this? How is this happening to us? There's never been food shortages in America. And now they're telling us and warning us that it's coming. Most of us never experienced walking into a food store and seeing empty shelves. Now, we saw it briefly at the beginning of COVID, but, are we going to see that now as the norm? So because of normalcy bias, people won't do what's necessary to protect themselves until it's too late. Buy food. If you could afford to, buy food. Store up food. Canned food. Pasta. Water. There's no time like now. I mean, people have been preppers for a long, long time, and people have been made fun of because they have this store of food and guns and this, that. They're not looking too stupid now, and they're certainly not going to look stupid in the months ahead. And it's the best investment you can make. There's no better investment. Stocks and bonds are going down. The only thing going up are hard assets, food, energy. If food prices are 30% higher than they were a year ago, wouldn't it have been made sense to invest in food a year ago? Where are you going to get a 30% return on your money or more? Now, of course, you can't keep perishable items, but you certainly non-perishable items you should be stocking up on. Think about what would make you crazy not having the availability to get. Is it coffee? Well, you better be stocking up on coffee. There's coffee shortages all around the world, and it's getting worse. And the price is going higher. How would you feel if you couldn't buy coffee? And you couldn't have your morning Joe? I would be pretty distressed. So you can buy it now, and people are doing this. Your neighbors are doing it. People who are forward-looking are buying up food right now. They're hoarding. And that makes a lot of sense. Hey, what good is money in the bank if you have no food in your pantry? So I can't stress it enough, and I'm probably going to talk about it every week. Because if I motivate 5 of you to buy some extra food. Now, you don't have to go out there and spend $1,000 on food, but every week you shop, buy extra. The things you use a lot, buy extra, as long as it's non-perishable. I can't stress the importance of that enough. Let's look at weekly financial markets. What happened this week? The Dow was down fractionally, down 0.4%. Still for the year, the Dow, which is the best of all stock market averages, holding up better than the others, as you will see in a second. Year to date, the Dow Jones Industrial Average is down a little over 5%. S&P 500, though, for the week was down 2.39%. So the S&P was down, what, 1, 2, 3, 4, 6 times more than the Dow this week. And it's certainly down more for the year. The S&P 500, which is what makes up most mutual funds and so forth, down almost 8% for the year. But the worst index of all is the tech-heavy NASDAQ. The NASDAQ was down 4% this week. Down 14.66% for the year. And some individual stocks, individual tech stocks are down multiples of that. So it's a bloodbath in the stock market right now. And with rising rates in the bond market, I mean, we're seeing prices drop in the bond market. So there's been really nowhere to hide in financial markets this year. Stocks are down, bonds are down. You know, people are getting their monthly statements and they're saying, geez, you know, every month I see my account going down quite a bit, especially if you're heavy in the stock market. And I was stressing for the last year, I've been telling you, you know, it's time to evaluate your stock market exposure. Many people had way too much in the stock market because the stock market went up a lot over the last few years. And maybe you wanted to have 60% in the stock market, but now you have 85% of your portfolio. You got to evaluate your risk. People in America, in their portfolios, in their 401ks, are too exposed to risk, especially in the world that we live in right now. All it takes is a headline, and the markets are crashing. We got rampant inflation, not good for the economy. We're starting to see the economy starting to slow down as a result of inflation, and we will see it slow down as a result of higher interest rates. So the stock market's a very dangerous place right now. As I mentioned earlier, oil prices have resumed their increase, almost 107 a barrel. Gold continues to move higher, albeit on a slow pace. $19.75 an ounce for gold, $25 away from $2,000. Going much higher. Silver's been making a move, over $25, almost $26 an ounce. But the most important thing right now, well, not the most important thing, one of the important things is the yield on a 10-year Treasury bond, which is soaring, and mortgage rates, which affect the economy. Let's take a break. The call number here is if you have a financial question or a comment on anything we talk about here on the program, 732-237-9626 is the call number, 237-9626. My name is Lou Scatigna. You're listening to The Financial Physician. Don't go away.